Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
We're going to rip up the script right now. Head of Compliance, Goldman Sachs just called in and said Amanda Lynam, when she was a sell-side analyst at Goldman Sachs, never wrote a report with the word insane. Why does tech get a free pass on this malarkey?
Well, good morning. Thank you for having me.
BlackRock is with us this morning.
And I think in the credit market, there are certain sectors that have just such strong financial flexibility, and so they benefit from having cushions that.
Their rule book is different. If you were covering Procter & Gamble, name the firm, and you said their revenue for toothpaste looks insane, you'd be sitting with your counsel.
Yeah, I mean, I think just in the backdrop, there's all these paradigm shifts that are happening in the investing landscape, and tech is obviously at the forefront of that with artificial intelligence. But it's funny having covered companies, sectors just ebb and flow in terms of what's making news, and but more so what's actually impacting the investing landscape, and that ebbs and flows over time.
To global macro credit at BlackRock, are we in an insane bull market, and how does that affect your world?
Our view is that it's really dependent upon the growth backdrop validating the credit spreads that we see right now, which were at the tight end of the range and which are quite resilient. There's a lot of focus on, can the Fed deliver the cuts that are priced in? Our view on this is that if the Fed cuts less than what is priced in because growth is just so good, that is an easily digestible backdrop for corporate credit, and I think that's something that we would like to see.
John Tucker has been reporting that the month of September was like the biggest month ever for new issuance. Do you guys buy everything that Wall Street puts on the tape?
Well, there is a lot of gross issuance, but actually, if you dig under the surface, there's not a lot of net issuance in this market, especially in the leveraged finance market. So if you want to stay invested, you have an opportunity to do that in the new issue market. I would say the other technical factor that's happening alongside limited net new supply, alongside yield-based demand from investors, we have higher coupons that are getting reinvested into this market all the time. So a lot of the questions that we get from investors, why are spreads so tight? We can point to actually a case for spreads to go tighter from here. We're expecting some near-term volatility around the election, but there actually is a case for us to be tighter than this. We were tighter than this as recently as mid-2021 when yields were lower and there wasn't such a supportive backdrop. So I think that the technicals in the corporate credit market, to your question on supply, are really astounding.
So what are you guys buying these days? Are there sectors you like? Are there durations you like? How are you kind of focusing?
So I would say first and foremost at the sector level, financials look attractive still to us, first and foremost because of valuations. There's room for that.
So JP Morgan is going to report on the 11th.
Upcoming next week.
On the 12th, they're going to come out with a bond issue like they always do. Right. That's something you'd be interested in.
I think in general, just taking a step back and leaving companies outside of it, we have a lot of moving parts with freight disruptions potentially on the ports, right? For a lot of non-financials, they're dependent upon shipping their goods across international waters, right? The supply chain disruptions can really impact. And so I think if you're in an environment where growth is above trend, we had some good data on the U.S. consumer even last week. We have an uptick in M&A that's happening on the strategic side already with more to come. I think that's a good backdrop for financials. Right. In general, it's been a lower quality rally across the corporate credit market. And I think there are pockets of that where we're definitely comfortable. High yield relative to IG, even within IG. When you start to get all the way down in the credit spectrum and the rating quality, you have to be more judicious.
Jennifer did a lovely tour de force with Mark Rowan of Apollo yesterday. It was a real, pro. Joel Levinson hung on every word of it. Of course, taking notes.
Yeah, credit geeks.
Amanda Lynam on private credit.
Yes.
What's the shadow? What's the risk out there?
Well, we have a pretty constructive view on private credit in terms of the growth opportunity. We think that we're far from being saturated. I think what the industry needs to do is preserve the rigor in valuations and investor education as the addressable market of investors expands. So we've already seen an addressable market of borrowers expand. We've seen borrowers tap the private credit markets, even though they have access to the public markets. As this market expands to a wider range of investors, it needs to be crisp about illiquidity risks.
But does the Lisa Mateo family office have any transparency on private credit?
Actually,
do they know what garbage you're buying? Oh, excuse me.
No, I think it's actually quite good risk. There are two things to keep in mind, Tom. One is, as the market has grown, investors have been more selective about where they're deploying capital. They've been focusing on established managers with 4 or more vintages in the market, as opposed to new entrants. That trend continues. That's according to data from Preqin. The other interesting thing, there's a perception that syndicated markets or public debt markets equal transparency, but actually a large portion, for example, of the public leverage loan market syndicated leverage loan market doesn't have publicly available financials, right? So there actually are nuances in the credit market where you think that in the syndicated leverage loan market there's a wide degree of publicly available financials. But
she said vintages. I'm trying to get to 2007 bone. Ask one more question.
Exactly. Amanda, so how far out in duration are you guys comfortable these days? I mean, I considered my famed 2-year Treasury 3.66%. What do I need to do beyond that?
I think there's a lot priced in terms of rate rally in the intermediate and long end of the curve. We'd be comfortable going out into the belly of the curve, so intermediate, so 5 to 7 years.
Okay.
But I think once you start to get out to the longer part of the U.S. Treasury curve, you need to be focused on things like the deficits, like supply, like increased term premium. Realize that it's kind of been this overhang for a long period of time, but we do think that a lot is priced in terms of rate cuts all the way out towards the end of the curve, and actually would not be surprised to see that widen from here.
Have an insane day.
Thank you.
I'm begging you. With what you guys are doing in crypto, I need an insane Amanda Lynam memo on the linkage of your debt world into the crypto enthusiasm of BlackRock. Amanda Lynam with us today, of course, with Global Macro Credit with BlackRock. And now from the Hamptons, he's finally home. 6,000 square feet. You know, he lives down from the hitters, of course. Dan Ives joins us with Wedbush this morning. Tesla, I don't care, Dan. I mean, Paul will do all the AI stuff. OpenAI's raising money.
Huge.
Dan, I don't care. China, South China Morning Post. There's a fire at a Tata factory in Tamil Nadu, India.
Oh, boy.
So they can't make the back panels of the phones. Put up your phone, Paul. Yeah. 2 new iPhones right here, okay?
Boom.
Dan Ives, should we trust people like you guessing what's going on in a China factory or an Indian factory or a Korean factory?
Look, I mean, we've talked about a lot on the show. That's why we travel so much to Asia. It's trying to get some pieces of the puzzle to what demand looks like. And we've seen it for many years, right? I mean, many yell kind of fire in a crowd theater on Apple.
Stop, Dan. Every time Matt Miller, and that's back when Matt Miller had hair.
Yeah.
Matt Miller and I are standing on Fifth Avenue doing this ballet 12 years ago. Why do we do this, Dan Ives?
Look, I think part of it is trying to put the demand story together for every iPhone launch. But me and you have talked about it. We have no doubt this will be Apple's biggest iPhone year ever. And I think everything we see is leading up to it, but also it creates the volatility. It creates the opportunities that we've seen Apple from $1 trillion to $2 trillion to $3.5 trillion. To what I believe 6 months from now, it's over $4 trillion.
And the stock, Paul Sweeney, is being hammered. It's 1.7% from a record high.
I know, exactly.
The dog just absolutely won't go down.
Exactly. And for those of you on radio, Dan Ives may be wearing one of his worst shirts of all time, and that's saying something because he keeps the bar very, very high on that regard. Hey, Dan, I'm seeing some analysts on the street cutting estimates. Is the iPhone, I mean, Tom bought one, I bought one, and I know on your channel checks, your bells went off when Tom and I bought phones, but give us your sense about the unit shipments of this iPhone 16 and how investors should think about it.
I think numbers are going up for the street. And look, the the big focus is going to be the holiday quarter. And we've seen that throughout Asia. I mean, September, I think, is going to be a slight beat. But the big thing is they roll out Apple Intelligence going into the holidays. That is going to start what's really going to be called a 2-year super cycle for Apple. And I think that's what the street's focused on. That's why even despite some of the negative sort of noise out there, stock doesn't go down, because I think investors see where this is all heading next 6-9 months.
Hey, Dan, we also had some news yesterday from Tesla. They reported some numbers. Give us your thoughts about what you saw from their numbers, their deliveries, and their production, and what's your view on Tesla these days?
Yeah, look, it was the first sort of incremental positive that we've gotten. I mean, call it in line in terms of year-over-year growth. I think all focus now is not just going to Q4, but going into next year in terms of where you're now going to start to see growth on the story. Price cuts have basically subsided. And to me, next week, it's a historical event in terms of Robotaxi Day will be there. And I think it's the start of this AI story playing out. In our opinion, continues to be the most undervalued AI name in the market.
Where do you, Paul wants to ask about OpenAI. He's trying to get 8,000 shares. But Dan Ives, state in AI success right now away from ChatGPT and computer programming. Give me one idea of a success.
The messy of AI Palantir. That's where the use cases are exploding. And I think if you look on the enterprise, look, Tom, we have 84 use cases for AI today. 4 months ago, it was less than 20. On the enterprise, it's exploding. That's why you're seeing the OpenAI valuation. That's why you're seeing Accenture and the godfather of AI, Jensen and NVIDIA, do the partnership. We continue to say it's 9 p.m. in the AI party that goes to 4 a.m.
So, Dan, again, just for those that aren't aware of it, explain to us what happened yesterday with this AI. What did they raise? What's the valuation? What is OpenAI, by the way? Because Tom, he thinks he got some shares in his account. He's just not sure what he owns.
Well, OpenAI is essentially the foundation. Obviously, Altman, everything. It's the foundation of generative AI. From a core technology perspective, you got the chip on a GPU from NVIDIA. You got the actual hyperscale players like Microsoft and others. OpenAI is the key of the whole thing. And 150 billion, go back to a year and a half ago, it's basically a 30 billion valuation. So 5x valuation. Right. NVIDIA and others, this just shows that this is not hype. This is just the start of the AI revolution. I think this is just another sort of foundational moment to where this all heading.
Is it replicable? Can somebody else do what OpenAI does?
I don't believe it's replicable at that scale, just like NVIDIA. There will be others that play into this massive revolution. But OpenAI right now, they're essentially the only game in town relative to that foundational platform. And that's why Microsoft, NVIDIA, everyone else wants a piece of this. There's no one else that could replicate what they have.
Dan, is there an IPO of OpenAI? Because a lot of folks have been saying, I'm waiting for that, that Facebook event for social, that Google event for search. Is there an opportunity for investors to get a pure play investment in AI that maybe OpenAI would be that?
Look, obviously you're going to have more and more on the capital markets going down this path. I think when you look at OpenAI, it's to get the popcorn out, right? They're not doing these valuations. This is all sort of leading to a yellow brick road of more and more capital markets for AI, not just about NVIDIA.
Halloween, Apple earnings. Frame out where the path of Apple over the next 12 months here at $225 per share.
I think the stock has a 3 in front of it over the next 6 months. I think you're going to have a good September quarter. December is going to be, I think, just blowout relative to what I believe holiday sales. And then services monetization continues. And then I think that's where investors realize the consumer AI revolution goes through Cupertino. That's worth $40, $50 per share.
Wow. Dan, nobody cares. Paul Sweeney, did you return your old iPhone yet?
No.
In the box?
No, but I'm going to do that.
I already have done mine. Dan Ives, people want to know, when we mail in our iPhone to Fort Worth, Texas, where does it go?
Yeah, and then that gets obviously resold through the channel. to ultimately, whether it's in the U.S. or whether it's developed markets, that eventually goes to another consumer that buys an iPhone.
It goes abroad to a consumer. Any idea what they spend on that iPhone? I spent more money than God on.
They have very strong resale value when you look at that. So
they gave me $400.
It could be $400 or $500. I mean, if you look what they're paying you back, the carriers, the resale value tends to hold up very strong, especially internationally for iPhone Pros and Pro Maxes.
What's your single best idea right now?
I mean, single best idea here to me is Microsoft, just because when I look at Microsoft in terms of where everything's heading on AI, I think there's a stock $550 next 6 months.
Unbelievable. Dan Ives, great. I like his shirt. It's sort of Pontilist. It reminds me of before Matisse.
Yeah, exactly.
I mean, if you went to the Louvre, you could see that shirt. No, excuse me, Musée d'Orsay.
Yes.
Down the river
exactly.
with the old train.
Yep.
It's a more Musée d'Orsay shirt.
I mean, I think we could do a special just from the Dan Ives closet. I mean,
we could
do a remote
bright
from there.
lights.
Yep.
Dan Ives out in the Hamptons. Thank you so much. Greatly appreciated. He is with Wedbush this morning. This is a joy and perfectly timed. Joining us from Point 72 Asset Management, Steve Cohen's investment shop when he's not over at Citi Field. Sophia Drossos joins us today. So Jose Quintana is everything about the Mets. He's in Venezuela doing nothing as a kid. The Mets had the best Latino program of anybody in baseball. They invented it. What's the mood at Point 72 this morning? Can Mr. Quintana get it done at 7 o'clock tonight?
Well, first of all, thanks for having me. Good morning. The mood's very positive. It's very exciting to be playing baseball in October, to be making the playoffs, and the team has been playing in a very exciting, impassioned way.
Nailed it. You can keep your desk. Did you notice she's wearing Mets? She's got the Balmain this morning with a Mets look on.
Smart.
You know, the blue. Sophia, to get to the effort here, out of Michigan economics as well, on the labor economy, how do you advise Point 72 on the general vector, the tone of our labor economy?
Well, in general, we've been more positive on the labor market. I think what we're seeing right now, this slowdown, is really more of a normalization. When the economy reopened after the pandemic, a lot of businesses had to start from very low employment levels. They had to offer higher wages to attract people to come in off the sidelines and come back to work. They had a lot of positions to fill. So we were really seeing these quite strong labor prints. Very outrageously strong in some ways. And we are just kind of correcting from that. And so we look at the glass as being half full. Things are moderating. Certainly, I think the unemployment rate has caught a lot of people's attention because it has picked up quite meaningfully from the recent lows. But it's not picking up because there are layoffs. The unemployment rate is rising because we are seeing more incoming labor supply, more new entrants. So for us, it's not necessarily a recessionary signal. Clearly, we're keeping an eye on it, but it looks like to me that the labor market is just transitioning out of an extremely strong, overheated patch to something that's more sustainable.
So does that suggest the Federal Reserve can be, maybe more systematic in thinking about 25 basis point cuts every meeting, every other meeting? Is it, or are they going to be front loading some of this, do you think?
So given the strength in the labor market and in the overall economy, I think one thing that was really quite notable to me were the upward revisions we saw in the GDP data last week, showing us that there was even more forward momentum into the economy, even as the Fed is cutting rates. So it argues that the Fed can enact a more gradual path going forward after starting with a relatively large 50 basis point step.
Thank you so much for bringing this up. I've been remiss, folks, in not mentioning this upgrade. There's two ways we measure the economy. And I'm going to suggest both of them, like in the United Kingdom, was oops, it did better than we thought. Why?
Well, one of the key reasons we had the upward revisions was because of household income being revised higher and corporate profits being revised higher. So when we take a step back and we look at the economy now, it's pretty clear what's been driving consumption. What we saw on the back of the revisions is that the savings rate was revised up from, very paltry 2.9 to a much more healthy 4.8%. It's telling us that the consumers
that's a ginormous leap.
Of course.
2.9 to 4.x, right?
Yes.
Okay, the cynics are going to say, why do we get that wrong? I'm going to say, because we're all rushed and we have to wait for the revisions, right?
Yeah, the revisions are the complete picture. And so the other thing that stood out to me was the corporate profits. They remain very healthy. And for me, this is an environment that's not putting pressure on corporates to get rid of labor.
And Paul, it's a 2000 opposite. I mean, do you remember that day in 2001, Paul, when you realized the profits were a fiction?
Yeah, exactly.
In 99, 2000?
Yeah.
That's not where we are now.
I was seeing clients in San Francisco the day I realized, oh boy, this is big.
Exactly true.
Talk to us about the consumer here. How is the consumer? The consumer, I guess, has a job if he or she wants it. Real wages are going up. It feels like the consumer should be in decent shape, yet I know there's a bifurcation out there.
Of course. So in aggregate, the consumer, I think, is benefiting from the fact that inflation is falling and their purchasing power is increasing. And also, I would point out very specifically, gasoline prices have declined. That obviously is a big part of the consumer wallet. So with gasoline prices and broader inflation declining, there is more budget to spend on other things. And yes, there is some bifurcation with perhaps higher end consumers doing better because they're also benefiting from the asset side of their balance sheet, from their homes and their portfolios. But even for the lower end consumer, help is on the way. The Fed's already started its rate cuts.
Dean Mackey does exquisite narrow work. I mean this with all acclaim, and Sophia, you're the same way. It's wonderful to think of Mackey and Drossos dovetailing together. What's your unknown on the Mackey spreadsheet right now?
My unknown. Well, luckily, I've been working with Dean. We've had a great call on the consumer, and that is his background. As you know, he's done a lot of research. So, and at the Fed, this was something that he was very well known for inside of the building. So, for me, it's, are we going to continue to be right on the fact that we've gotten the supply side adjustments, income is holding up very well, corporate profits are holding up very well, and we're just going to transition into continued economic expansion. Given a lot of the volatility that we've seen in market doesn't seem to be impacting the real economy. So
were you at Michigan with Claudia's son?
It's really funny. We both worked for the same professor, but I'm a touch older than Claudia, so
well preserved,
older and wiser.
It's an amazing
we worked for Matthew Shapiro, your friend, Dr. Shapiro.
Matthew Shapiro, Paul. There was this point. It was in that Graham lecture we lost way too early, like Rudy Dornbush. But Michigan became the inflation study combine, sort of linked in with the Cleveland Fed. And it was led by this guy, Matt Shapiro. And you'd look at it and you'd go, why was all this inflation brilliance there at the time?
Right.
I mean, what was it that Michigan was doing at the time to own inflation research?
I think there was a lot of focus on consumer and consumer perceptions and what was going on with inflation expectations and the price setting process. As you know, Michigan has a big survey research center as well. So there were a lot of things.
Conferencing and all that.
Yeah, that's right. There were a lot of things that worked in tandem together. Yeah.
Sophia, thank you so much. Sophia Drossos there is suggesting the Mets may pull it off. A year ago, I made The Loom of Time my book of the year. It is brilliant. And as Kaplan says, get out the map. I mean, that's what you do. And right now, we're going to get out the map on the Eastern Mediterranean with Robert Kaplan. And Robert, I've never done this, but I have a book of the election, a book of autumn, and it is your book, The Tragic Mind. It's 115 pages, folks, deep. It's a dense book. I'm not going to mince words. And there you are, Robert Kaplan. Imperial wars are decided by fate. What is the fate of the Eastern Mediterranean?
Tom, I think the fate of the Eastern Mediterranean is that we will be in this cycle of wars, ceasefires, negotiations until there is a domestic change in the regime inside Iran. Remember, the Cold War ended not because of a battle was won or anything international. It ended because of a domestic reason. The Soviet system collapsed. And I think at some point the regime in Iran will transform, transition, or collapse on its own, not from an invasion or anything.
Right.
And at that point, the whole Middle East will be different. You'll see diplomatic relations between Iran and Israel, lots of other big changes. But
Right.
the key thing to watch here is that if the Israeli attack can do something, the Israeli counterattack can do something that will seriously embarrass the regime in Tehran in the minds of its own people.
Yeah, but on November 4th, 1979, here's the difference, folks. I was in a bar in Killington, Vermont. Robert Kaplan was living what we saw in the Eastern Mediterranean, the Iranian hostage crisis. It's basically been a consistent theology the whole time. Do you sense a point now where the theology of Iran can be defeated to a newer, better political system?
Yes, I do. Because Iran is a country of a narrow clique of North Koreans running a whole country of South Koreans, essentially. The people are absolutely cynical about the regime. 90% of the population hates the regime, which has destroyed the currency, destroyed the middle class. There is no love lost between the regime and its people. And the regime is now in a calcified, decadent, late Soviet phase. So I think the big change is going to be domestic upheaval in Iran, and the thing to watch for is how the Israelis select their targets for their counterattack that could worsen the domestic situation in Iran.
So, Robert, what type of targets would you recommend to the Israelis here? Because the talk is, do they target some of the nuclear facilities? What would be your recommendation?
First of all, a good target match would be the port at Bandar Abbas and some of the other ports and oil terminals that could just cut off their income, which would be immediately felt by the man in the street. Not immediately, but after a month or two, by the man in the street in Tehran. That's one target set. Another target set is simply by targeting and taking out a good deal of the nuclear facilities or the missile facilities, you would deeply embarrass the regime and make it hard to have a second or third counterattack. And the stars are aligned for this because Hezbollah, though far from being defeated, is weaker now than it's ever been. Gaza, though Hamas is far from being completely defeated, is weaker now than it's ever been. So in terms of regional repercussions against Israel from an attack, the Israelis are in a very positive situation at this moment.
Robert Kaplan, I asked this question yesterday. Let me ask it of you, and it's informed by an article in The Atlantic 24 years ago, where the return of ancient times, where you talked about Rabin. What would Yitzhak Rabin think about the Netanyahu method?
Yitzhak Rabin, first of all, would not be the leader of such a right-wing extreme Israeli government. Yitzhak Rabin was comfortable negotiating with people who, frankly, with Americans who, frankly, were much smarter than the Biden administration. President Biden made a big mistake in the last 48 hours. He said publicly that Israel should not attack the Iranian nuclear facilities. That's something you communicate privately, not publicly, because you should never tell your enemy what you're not going to do. Never take anything off the table. Yitzhak Rabin was a really wily operator. And I think now given this situation right at this moment, Yitzhak Rabin would hit Iran very hard. So though Rabin and Netanyahu are from two opposite ends of the political spectrum in Israel, at this moment they would be they would be aligned.
We're out of time. Robert Kaplan, thank you so much. I really can't say enough about a book for America that is trying to look forward. It is Tragedy by Robert D. Kaplan. It's dense. I'm not going to mince words. It's 115 pages, and it's a really, really dense yet important read. Controversial. It'll make you think about where we've come from the World War II generation on to where we are now. And where will we be forward? Robert Kaplan with us on the Eastern Mediterranean. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.